morning. All right, let's have a look at the charts. Let's have a look and see what's going on. Bitcoin. Let me have a look at these candles first and see what's going on. What's that? Get rid of all this stuff. Right, looks okay. Daily looks like we're ranging. That's what I can see. See that? It's a little bit of a range going on here after we had a nice explosion of volume. So just looking at the candles, just some observations in what you could do is you could break down these candles into sections if you wanted to see where the price range is. And I think this, like, you see this red candle here? At the moment everything is kind of ranging inside of that candle. That's what it looks like. So you could just draw some lines on the top and the bottom of that candle. Let me make my lines white. Put SFP on them. You could argue that that's the range, but actually when you're kind of considering candle formations and candle structure, this expansive green candle, this big one here, is holding the range effectively. So even though now the range is getting slightly tighter, you've got this red candle, and now the red candle is holding the range. In actuality, it's this big green candle that's holding the range. So what you could do is you could break down this candle into sections. So that's what I do sometimes. That's the green candle, candle body. I call it daily candle body top. You could put one at the base, at the bottom. You label these how you want. There's no real rule of how you label your lines. And then what you have potentially also is you have the wick. And then you have the bottom wick here. But I think the bottom wick, because the bottom wick and the body are so close together, you'd probably ignore it. And then the other thing you could potentially do is mark the 50% mark of the body, the actual body. Just take it from the open to the close. You can see where the 50% mark is. Again, I might label that. I'll get rid of this fib, and then I can just do the same thing. Daily candle body 50%. So that kind of gives you some very easy to see visual ranges. This red candle is at the moment actually holding the short-term range, but effectively what you have is the price is being held by this bigger candle. Okay, and you have the same idea with every candle. You could do that with every candle, but it's a lot easier to see with these bigger expansive candles. And because this green candle is the candle of interest, because that's where the volume is, that's the one that I'm going to be using as my parameters, my guide to calculate the extent of the price range. And I'm just looking at price now. I'm not looking at volume ranges. I'm just looking at price ranges. Okay. All right. What else? Let me just mark this as, is that a doji? What the heck? I always mess up with these names, so I have to look at it. Doji. What's it called? I just like to get the names right because people criticize me for getting the names wrong. I would just call it a wide-bodied doji, but let's see what the actual name is. Long-legged doji. What is that candle called? Just quickly do a search. I'll do a quick search and find these. Otherwise, I'm just going to make up a name for it. Short of a name, I will name it myself. Yeah, I can't find it. I'm going to do it's a doji, but it's not really a doji because the body, it's got a wide body. So usually what I call it, I just call these wide-bodied dojis, but I'm sure that there's a technical name for this candle. And I haven't memorized them. I just make up names for myself. I can't find the name. So for the sake of this stream, I'm just going to call it a wide-bodied doji, but it's probably not. It's probably called something else. Just a normal candle, I guess. Normal red candle. So I'll just call it red candle wick. I'll call it daily. I like to put daily wick. Hi. Daily. No. Right. So I'm kind of imagining that these candles are structuring the price action. That's what I'm contemplating. Now, actually, what you can see is that the daily candle body top, which I've marked, is also a daily level. So the daily level is the actual level, but I mean, effectively what you have is you have this red candle that's holding the price, and it's actually being held within the body. And you could also, if you wanted to, you could also break down this red body into a 50% mark. And so what we can see now is the price has come down to the 50% mark, and there's a little bit of a reaction there. I'll mark that down as well, just to kind of keep things a little bit consistent. Just do a little fib pull, and then again do exactly the same thing. Just 50%. And even though 50% isn't a fib a level, 50% marks the midpoint of ranges. So that's why they're important, because it's the midpoint. It's the midpoint of the range. I'm just going to mark that down. Red candle body, 50%. So it just gives you a different idea about easily visualizing candle ranges. Okay. And so what you would find when candles are forming and when candles are being printed is that they usually range between previous candle ranges. That's usually what happens. So sometimes what you'll get is, like, if you get a close underneath the 50%, the next candle will now be in the bottom half of the candle range. If you're within the wicks, then you're within that body, and it's like an inside candle. Every candle that comes after it is an inside candle until eventually you either get some kind of breakout or not. And the most bullish price action after you get this big expanding green candle is, the most bullish price actions for the price action to range in the wick. It's something to bear in mind. So if you're looking for continuation, usually what happens is that the price action will range in the wick. Can I show you an example? Yeah, there's a little bit of an example here in the past where you had the range was in the wick. You see that? That's bullish price action for continuation. It's just something to note. And then sometimes you get a reversal from the wick as well. So you have to also bear in mind, you see how that was ranging in the wick, and then it lost the wick, and then it couldn't get back into the wick before it collapsed. So these are really easy visual ways of seeing how candles can control price action. Good morning, ARIW Tube. Will Bitcoin go up or down? That's the question. I think Bitcoin is ranging because 80% of the time the price will range. So, and the reason why the price is ranging is because look, it's been going up. So the price needs to consolidate before the price can determine its next course of action. And the reason why the price needs to consolidate is because usually when you have some kind of move, it's always usually initiated by some kind of squeeze or liquidation event. That's usually when the price moves. So you have some kind of liquidation, and then it depends on how the price ends after some sort of liquidation or short squeeze or long squeeze. So that's usually how you can know. At the moment, it's just range bound. What I'm seeing right now is the price is range bound. So I'm just marking off some easy to see candle levels. These are just candle price levels. And you can see when you go to the 12-hour chart, how these kind of candle ranges control the price movement. So you see on the 12-hour, the price action in the 12-hour chart, see how the price went down came back up, and then and if you break it down into the lower time frame, it'll be a lot easier to see. Okay, so what I can see now, yeah, you can see how the previous, once I've marked off these higher time frame candle ranges, you can now on the lower time frame. Why is there no translation? What does that mean, no translation? Dude, I'm speaking in English. Translation for what? Don't know. Get the weirdest questions. Excuse me. It's always good to blow your nose. So look, on the lower time frame, what you can see, just by marking off these easy to see levels, how the price is moving. And you can see right now, the price is ranging between the red candle body 50% and the red candle, the daily candle body top. All right, you see that? It's kind of, at the moment, we're kind of range bound. And so what's happening all the time? It's range bound price action. Break it down to the lower time frame and just quickly, easily see how the price is moving around this. Now, it doesn't necessarily mean you can trade, but it does help with the bias. Okay, so for the price to get bullish, you need to get back above the daily candle body top. ARIW Tube is saying my English is very bad. Forgive me. I'm sorry, I can't help you. Maybe by watching my live streams, you can improve your English. I don't know. Maybe, maybe not. So for the price to get bullish, the price has to consolidate above the daily candle body top and in the daily candle wick. Yeah, it needs to be in the wick. Yeah, that's when you start getting consolidation up here, and you know the price is in the right place for continuation. So if you want the price to go up, the price has to be in the highs. That's really how it is. If the price wants to go up, it has to be in the highs. Price isn't going to go up if the price is in the lows. If the price is in the lows, then how is the price going to go up? It has to be in the highs. The price can't go up if it's in the lows, and the price can't go down if it's in the highs. Now, if the price is in the highs, it can go down, but then it's back in the lows of the range, but it's still in the range, yeah? And the idea is to discover when you leave the range, yeah? At what point can you see the range break, okay? And so for continuation, the price needs to be in the highs. And for a reversal, effectively, the price needs to be back in the lows, right? It's just a really simple way to contemplate price action. But that being said, these are the lows down here, all the way down to the daily candle body bottom. Now, that's the extent of the green expanding candle range, yeah? So even if for some reason we go down like that, you're still within that candle, that big green expanding candle that I initially drew out at the beginning of this exercise, yeah? So it doesn't necessarily mean it's going down, because then you could easily go back up and work your way back up. But effectively, you're still range bound. You're range bound by the previous candles that printed, okay, that are printed, okay? So I'm not saying this is how the price is going to behave in the future. I'm just saying it makes the price goes from range to range. The price is always going from range to range, and that's why the price moves the way it does. And so it's really helpful to see where the boundaries of the ranges are, because then you can know before the price moves if the price is breaking out of ranges or it's still within the range. And so it's just an easy exercise. And so effectively, if this was to somehow happen, you wouldn't get bearish, because you'd be thinking to yourself, well, we're still in the range, we're still range bound, we're still locked between the top and the bottom of that daily candle that I printed, that I described in the beginning of the stream, this big green expanding candle, which effectively is holding the price. So you could get price action which takes us all the way down to the bottom of the body of this green expanding candle, and the price would come all the way back up. Effectively, what you end up with is a big range, effectively. And so when I'm looking at this previous price action here, this whole consolidation range, basically that's what happened. It's effectively the same thing. You have the candle body there. Actually, what I can see is because the body and the wick were so close, it was really the wick that was guiding the price. But let's just put the body, it's fine. Got the body there, and then you have basically 50% mark is somewhere there, maybe slightly higher. And effectively, it was struggling to get down further, and eventually it just went down and it just broke up, okay, and it just left the range. And the reason why you know it left the range, just looking at the way these candles are formed, one of these dojis basically was holding the price. Here you kind of lost it, but because you didn't lose this candle, it was still within the range. But effectively, as soon as you left this candle's range, the price exploded upwards, effectively. It's not always precise, but it's precise enough to see the way the price moves. It's just an easy way to see how price is moving. I don't know if the price is going to do this or do something else, but I do know that the price always goes from one range to another range, back to another range, down to another range, up to another range. It's always ranging. The price is always ranging. And then occasionally you get expansions. Occasionally you get expansions. and then it goes to another range. It goes to another range. The only exception is price discovery. Price discovery, the candles, the price behaves slightly differently, but we're not there yet, and so there's no point contemplating price discovery because we're still locked within ranges. All right, so this is just an easy explanation of how the price is probably going to move in this range. So let me just create a group and read that candle range. Call it current candle range. All right. Now, if I was to, let me have a look at this. All right, so I didn't trade yesterday at all, and oh, well, look at that. See that? It's interesting, huh? See how the price went up, took out the liquidity there, and there the short was in play. Look, that was a very, I didn't take that trade, but that was a profitable trade because the idea of this price action was a swing failure. And so I didn't take that trade because yesterday I was very busy and I was unable to trade. But look, you see how the price went up, took the liquidity from this high here, came back down. That's a swing failure pattern. You take the trade, you short, set your stop above the high that's just made, and then as the price goes down, you'll take profit. That anyone who took that trade would have easily by now taken their profit. The reason why they would have taken their profit, even if they got in late, the price has easily come down 1% without stopping them out, without stopping the position out, and you would have taken profit by now. And that profit would have been your 1% of your account value because your risk would have been about 1%, and you've easily made your 1%. You'll probably have a little runner. You could probably set your stop at break even, or you could even leave your stop where it is, and you won't, even if you get stopped out on your runner, you won't lose because you've taken most of your profit out of the trade. Okay, so you see, when you make a trade plan, it works. It works. It's good to plan things. And you see I even marked TP here. I don't know why I marked TP there. Let me have a look at my previous lines. What was that? Some ideas there. That's fine. What's that one? Nope. It was lower down. Okay. And other levels. All right. So I have these levels here. Let me keep those. Let me see these levels here. So we have those levels there. What are these? Oh, these are nothing. All right. Let's get rid of these. The current candle range. Oh, you see, look, see the red candle body 50%. You see that? So actually, it was a swing failure, and you're back into underneath the daily candle body top, and then you're back into the daily red candle 50%. See that? So that's effectively what's happening with the price. Taking liquidity by liquidating shorts here. Longs close, short center, and then as the price comes back in, longs start to re-enter, shorts start to close, and the price starts to come back, because effectively what happens is when you're coming into support, longs open, shorts close. When you're coming into resistance, longs close, shorts open. So there's this kind of constant ping-ponging of price between levels, and even though a lot of these lines you can, I mean, every single one of these lines you can trade, but it's hard because you need an invalidation. So that's why the easiest trading in the markets are swing failures or failed auctions, because that's when the price goes above a previous level and then comes back. It's so easy to see, and it's so easy to take the trade, and it's so easy to see the invalidation. Okay, that's why swing failures are the easiest trades to take. But there are lots of different trading strategies based on level to level trading. Once you know the levels, once you know where to add, where to remove, where to scale in, where to scale back. Okay, ultimately the key to trading is having your absolute rock solid invalidation, because once you know where the invalidation is, then you can just scale in and scale out. And if you're invalidated, you're invalidated. Effectively, that's how trading is. Everyone has different trading plans and strategies. I prefer this idea because you're in and out, and then you take your profit, and then the rest you just move on to the next trade, and it's a stress-free way of trading. But there are different strategies for trading. All right, so that was yesterday's trade. So potentially I'm still looking for a long down here. You can see I'd like to take that long, and what I'm going to do is I'm going to draw another range pool, a volume pool, sorry, from this whole daily candle onwards all the way down here. Just pull the whole thing just to see where the volume range is. So the volume range is different from the price range because it's telling you where the volume is. Let me just pull it up to here to see what it is. Okay, so it's slightly higher up here. I'm not sure which one I want. Let me reverse that. Back. See if that's any better. Probably to there. So what you can see is that the value area low, which I previously marked, is slightly higher now. I'll move it up, and the value area high is now slightly higher, and the point of control has shifted all the way up there. Okay, so that is actually a bearish development on the volume. Okay, because what's effectively happened is the value area has moved up with the point of control. So now you're seeing volume being put in the highs of this range, and the range is actually, the volume range is moving up. It's okay for the volume range to move up, but you don't want the point of control to move up. You want the point of control to stay low, or to go lower in the range, because the point of control will act as the key SR flip within the range. Okay, when it's underneath, it acts as resistance. When the price is above, it acts as support. So right now, if I eliminate all this data, you can see, and we're looking at the 30-minute chart right now, what you can see is that the point of control of this volume range is acting as support, resistance, ignored it there, and kind of now it's kind of acting back as resistance. So we're kind of a little bit in this local range where it's kind of acting as resistance. Now, when you're in a range like this, it's never good to buy and sell at the point of control unless you're taking profit. So the key place to take profit will be the point of control. But when you're trying to take trades, you want to enter trades at the boundaries of the range. So right now the volume range is the value area high here, and you have the value area low down here. And so what you want to do is you want to try and short the top of the range and long the bottom of the range, but it's always the same. You need an entry. You need an invalidation when you're taking trades. Without an invalidation, you should never take a trade. Never. Okay. You need an invalidation. So you're not just going to arbitrarily short the high, because you still need an invalidation. You're not arbitrarily long the low, because you still need an invalidation. And looking at this current range, the easiest way to short the high would be another swing failure. And the easiest way to short the low, the easiest way would be another swing failure of these lows. Okay, easiest way to short the high, easiest way to long the low would be a swing failure. Okay, that's the easiest way. Now, sometimes you don't get that opportunity because you'll make a lower low, sorry, a higher low or a lower high, and you don't get the swing failure, and the price still reverses and goes down. It's a lot harder to trade those kinds of trades because you always kind of want the liquidity to be eliminated at the highs and the lows. That's an easy entry because you get liquidations at the highs and the lows, and then the price reverses. And so when you get higher buyers at the highs, they're market buys at the highs. And if the price reverses with all of that buying power at the highs and the price still goes down, that's already telling you that the equilibrium of the market is in the downwards direction. It's pointing downwards, not upwards. Because when you're getting market buys at the highs, you really want the price to go up. You don't want the price to go down. It just means that there was more selling power with all of that market buying at the highs. If you're suddenly getting an explosion of market buying at the highs here, and the price goes down, it just means there was more sellers than buyers. And with all of those market buyers, the market buying has now been exhausted. And as the price goes down, you can take that short because you know that's it. There's no more buying. You've just exhausted the buyers at the highs with a swing failure of a previous local high. Okay, the same goes with the lows. Now right now I'm not seeing any major swing failures of the lows. Potentially here into that daily level that was formed. That's a very viable trade as well, but at the moment the two best trades in this current range will probably be another short of the highs, another long of the lows. And what people need to understand is that the price will always range longer than you expect. Always. Hold on a second. Okay. Yeah, so you always want to buy the lows, sell the highs. And what people don't understand is that this price action now, when you're looking at it, people are thinking, okay, when's the breakout? Is it going up? Is it going down? When shall I enter? What's going on? All these like crazy questions. But potentially, you could just do this just for the next few weeks. Literally, that's what can happen. This could just go on for the next month. This could just do this. We just keep on going. Just forming a range, like non-stop ranging. This could just be range bound for the next few weeks. We've just actually entered a new range. And even though people are hoping or expecting or whatever that the price is going to go up, the reality is that this is probably going to range more longer than people expect and people think. And the problem is that a lot of people are going to get frustrated, and what will happen is they're expecting a breakout. Every time they long, this is what's going to happen. The price is going to go up. Let's say up there. They're going to long because they're expecting a breakout. Long, 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 long. Leverage long. And the price just kind of goes back down. Now they close at losses. Price work its way down. And now we're down. And they're going, oh my God, the price is breaking out to the downside now. Close longs, short, 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 close longs. Whoa, look at that. Now they have to close their shorts at a loss. Re-enter, they don't re-enter long until the price goes back up there, and then go, oh my God, it's going up, going up again. It's going up. Long, 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 long. Ah, shit. Oh my God, it's going down. Oh my God. Short, short, short. Oh God. Close, loss, loss. Loss, loss, loss. Loss. Lose money. Lose money. Long, 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 long. Lose, 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 lose. Losing more money. And, and all that's happening is the price is ranging. It's just ranging. Okay. It's just ranging. What you need to do is when the price comes to the lows, long. When the price comes to the highs, short. Okay. Short, long, short, long, short. Do the opposite. Do the opposite. Yeah. Don't expect to break out. Expect range, because 80% of the time the price is ranging. So don't expect to break out. Expect to range. Just trade the range. Trade the range until it breaks. Okay. And that one time it breaks, you'll take a small loss. And those 10 or 8 times that you take a trade trading the range, you'll make money. It's really that simple. Really that simple. But you have to reverse your mind. You mustn't think breakout. You must think range. Okay. Always think range first and then breakout later. This is very different to altcoins. Yeah, don't think altcoins are the same as Bitcoin. And actually, most people want Bitcoin to range, because as Bitcoin ranges, altcoins will pump. Okay, and we'll talk about that maybe later today, or maybe another time if you are still tuning in. So the lesson for today is trade the range. Trade the range until it breaks. Okay, now I've identified a bunch of levels which can, and this is how I see the price behave action. And people are wondering, sometimes they wonder, how come you can see how the price moves? Because I have all these levels and I know the price can't do that. It's impossible. The price, if it goes up, it will go up and then come back down. It will go up and then it will come back down. You know, it will go up, it will come up. Oh, there's a bit of a gap. Comes up down, and maybe it'll go back down. You know, that's how the price moves. It goes between these kind of, that's how it goes up, and if it goes up, it goes up, and you just make it up. But that's how the price is moving. Okay, because the price is always going from level to level. It's going from level to level. We've got these little bots buying and selling, buying and selling, buying and selling millions of times per day, per hour, per whenever. And they're always taking their profit with small increments in increase of value. And that's why the price behaves the way it does. But it's always from level to level. Now, we can't trade like bots. We're not fast enough. We're not smart enough to trade like bots. So we have to break it down. And we have to be very simple with the way we analyze the markets. And quite simply, the easiest way to trade this range is, where did I go with, hold on. The easiest way is to look at the volume range. Hold on. Got to answer this stupid phone call. I won't answer it. Where did I go? The volume levels should be here. That. that. I lost it. It's annoying. Let me just undo that. Get it back. Oh yeah, see other levels. Okay. Put that back. Okay. And so I had this daily level from yesterday. Let me just have a look at my daily level from here. Yeah, that daily level is stay in play. So actually what you can see is this naked daily point of control has now been cleared. So I'll get rid of it. The daily level is still acting as a resistance. So that's a very important level. And we have a freshly created daily level lower down. That's untapped liquidity. And what we're trying to do is trade the range, trade the range until the range breaks. And don't think that this is going to break anytime soon. Imagine that this range is now going to last for the next 4 weeks. You have to think like that. Yeah. Don't think that we're going to have another breakout. Think that we're going to have another range bound 4 weeks and then trade the range. So we know where the range is now. We have the volume range and then we have a price range. And in my mind, the price range, the extent of the price range is the top of this daily candle wick all the way down to the bottom, but I don't necessarily think it's going to go down to the bottom. So in my mind, I'm contemplating the 50% mark of the daily candle. So I'm thinking this is the range right now. That's the top. And at the moment, as far as I'm concerned, this is the bottom. This is the range. This is the range. And then what you have is the volume range too. So you have the value area high here. You have the point of control here, which is the highest volume node of this range. And then you have the value area low here. That's basically the range right now. And then you have some intermediary levels in between. What you want to do is you want to short the highs along the lows, and easily the best trading in this range easily is going to be an SFP or some kind of short into the high to go back down and a long into the low to go back up. That's really the best trading in this range. It may not happen more than once. It may not happen more than once. It could happen twice, but usually the furthest extent of the range isn't tapped more than once or twice. Okay, most of the rest of the price action is going to be somewhere in the middle of the range. And then what you want to try and do is look for the best places to short or to long, and usually those are the places where there is most confluence of either resistance or support. Okay, and so when you create these levels and you mark out these levels, that's what you're looking for. You're looking for confluence. You're looking for places where levels of support and levels of resistance are together, so that when the price comes down into those levels, you have the maximum area of support. So right now what I can see is that we have a nice fresh daily level here. You compound that with a swing failure of this low here. That would be your entry. Okay, it's coming into a previous range point of control. And then if I mark out my other levels that I had, where are they? Let me have a look. You see that one? Nope. Nope. You have a monthly level, which is there too. See that? And what else is there? Not that one. Not that one. Was that one? Nope. could probably look to take a, and then what you can probably do actually, just thinking about it, you can do a Fibonacci pull, and here I can show you that the golden pocket is roughly where the monthly level is into the daily level, and you have a swing failure, possible swing failure too. It's definitely going to be a lot of support if and when the price goes down here for a long. The entry would be a swing failure. That's the easiest entry, but I mean, potentially you could also, if you lose and reclaim the golden pocket, you have a potential long there, even if you don't catch the swing failure. And also because we're extremely bullish right now, it is possible we make a higher low here and just hold the golden pocket as support into the daily level, but hold a higher low to continue back up. You have to bear that in mind. All right, and then that's arbitrary. That's an arbitrary place to long. Personally, I would prefer us to long lower down. Okay, that's what I would prefer. All right, I'm going to take a 5-minute break, and then I'm going to come back and I'm going to have a look at TRVL and then some altcoins. If you have any requests for some altcoins, just drop it in the live chat, and then when I come back, I'm going to analyze them for you. Okay, I'm back. So anyway, just to finish up here, I think what I'm looking for. Let me get rid of these. Get rid of these, and that's fine. I think what I would be looking for now is if it was possible to get into this value area low, that would be great. But if we're going to get into the value area low, actually, I think I want to kind of come into this naked daily point of control lower down as well. I almost want to lose this value area low, go down, swing failure this level for a long, or I want us to come down here into this daily level and just make our way back off, maybe swing failure this level. So I'm kind of imagining two longs in this range. So what did I mark out here? Yeah, so I originally had this long, and potentially I'm looking for a long here, slightly higher up. The better long would be this low here. Obviously, the lower the better. But the swing failures are going to be the entry. So I'm looking for swing failures of these lows. And so what you would do potentially is just mark out these SFPs and then set alerts on these SFP lines. And then if the price comes into these lines, you can have a look. If there's a reaction, then you can take the SFP. You can take the swing failure. So I'll set one alert there, and I'll set one alert here. And then we'll see. And then for shorts, well, we had the short plan from yesterday. And so I'm still thinking about the high up there. So I'll add another alert there. Short BTC. That's it. That's my plan. I have a short of the highs. I have a long of possibly this SFP here, and then I have a long of this lower SFP there. And if you're longing, you're going to have to take profit at the point of control. And if you're shorting, you're going to have to take profit at the value area high, back into the value area high. And that's basically your first point of support and resistance as you take the trade, okay? And actually this lower long, you have to be careful, because if the price does come back into the, comes down to swing failure this low, you are coming back into the value area low. If you find resistance there, it's very possible the price does that. You have to be aware of that, okay? So if you see that the price is struggling to get back into the value area, then you may want to just cut back on that long and wait for confirmation. Confirmation will be to reclaim the value area. You're ending up longing higher up. Again, the problem is you're into a daily level, and that's the problem when you're taking shorts and longs. You take a long, you're coming back into resistance. You take a short, you're coming back into support. So that's the problem when you're taking trades at the extent of the ranges. So you have to be aware that as soon as you get an opportunity to take profit, you have to take it. So this is basically what I'm contemplating. Range bound price action. I'm not thinking anything else right now. If I could have a look at exo charts to confirm my bias, and I'll have a look at this. This exo charts is a very useful tool because it allows traders to see the market orders in the market, and it allows traders to see liquidations and liquidation bubbles. And so right now I can clearly see that we're ranging, okay? I can also see that the price is going sideways, and the CVD represents market selling, is going steadily downwards. That means that the price, again, as usual, is being absorbed by very big limit longs in this price range. So all of the market selling is being absorbed, okay? that's bullish. That's bullish price. That's bullish CVD. That's bullish absorption. It doesn't mean the price is going up. It just means that I would rather long in this range. And the only real short that I can imagine would be some kind of swing failure of these highs. Maybe these highs here, but ideally this high here. And if you get a swing failure of that high with a nice blue liquidation bubble, that will give you a very good entry to short right back down to the bottom of the range. And that's really what I'm imagining for shorting in this range. And then the short will be just to short the range. I'm not thinking short all the way down to zero. I'm just thinking the range. I'm always thinking the range. And then when you're longing, I'm thinking the range too. Okay. Yeah, there's a lot of opportunities to trade this range. A lot of opportunities. And there are different strategies for trading the range. But just imagine that this range will last a lot longer than you think. Yeah, don't think that this is going to go to the moon. That's incorrect. Okay, that's incorrect mentality. It's going to get you in trouble if you start thinking that way. Let me have a look at these other charts as well to see if I see anything interesting. Yeah, we have a nice level here at 60300. I'm not sure if I marked that off. Let me have a look. 60. It's lower down. I haven't marked it off. Okay. Should be. Oh yeah, have a look. The naked daily. So there's a really good trade lower down here because you have a naked daily point of control with a swing failure. You're going to get people really bearish and then the price could easily reverse. So that's really the best trade. The best long of this range would be down into this red line here. Okay, so just bear that in mind. Let me have another look at this weekly. Nothing there. And if I go back to the daily, the other thing you can do, I don't know why it's not happening. Maybe this one. That's not the right one. Not that one. Maybe this one. This TPO one. Okay. That one. Okay, yeah. That's the one. So this is the TPO chart. And what you can do is you can merge the data. Merge all of that. But usually you could do it in this one. Hold on, let me see why I can't do it then. I'd rather do it in this one. But yeah, there it is. Merge. Merge. Let me merge all of that. Merging all of this. This is the range that we're in now. See, I've just merged all of that volume data. You can see some really nice single prints lower down. They will act as support. And then we can see the volume area. Okay, and some selling tail at the top. Okay, let me have a look at this one. Not that one. Kind of wanted it in this actually. Oh, I can't get it in this one. Is it because it's the daily? Oh. It's a bit weird. Okay, let me just try and get this one. Nope. And that's a session in block. Okay. 10-minute. 10-minute. We'll go to daily. Yeah. Look at that. Right. It's the best one, I think. that's right, it's in the 4-hour chart. Let me go to the daily chart. Nope. That's why it's not working. I need to have I need to look at this and just try and figure it out. Right, forget about that. That's fine. Well, maybe that's it. All right, let's move on. Go back to Bitcoin. Bitcoin is fine. Just leave that now. Don't need Bitcoin anymore. Quickly have a look at Bitcoin dominance. Have a look at it. Oh, look at that. That's beautiful. That's exactly what I was hoping for. We're back into the value area. So Bitcoin dominance isn't breaking out. This is very good for altcoins, and effectively what you want is Bitcoin dominance to go down. If Bitcoin dominance goes down, altcoins go up. That's what we want. Okay, it's quite a lot of volume coming out of Bitcoin dominance right now. This is kind of what we want. So we're still range bound with Bitcoin dominance, but actually we're in the highs of the range. We're just about to lose the value area high, so this is bullish for altcoins. I like that price action. Let me have a look at ETH BTC. See now ETH BTC is come back into this big significant level. Let me just kind of expand this and get more data once it prints. Let me expand this volume range. Delete that one. Delete that one, and that was the golden pocket. That's fine. All right, so what's interesting here is we're struggling to get back into the value area low. That's going to be a very important level, this blue line that I've got marked off here. And actually what I'm going to do is I'm going to label it again, because I must have deleted my labels. Get rid of these. I already had it marked with a drawing. You've got the point of control here. That's going to be strong resistance because of the golden pocket. That's slightly above it. And then you have this line here, which is the value area high, which is going to be the extent of the range at the highest point. All right. Give it a key. And that's your volume area. I'm going to delete that. No need for that now. We've got these marked out. And effectively what's happening is, get rid of this stuff, that we're locked in this lower range. As always in a range. Always in a range. Always in a range. Just imagine that. Just change your name. All right, so this is interesting. We've come back into this lower value area after getting rejected from the overall value area, and we're now finding support back on this local range point of control. So we are back into support, but we're back into the value area, and for the price to move up, it has to flip this value area high into support. That's number one. For the price to go up, it has to go up and flip this value area low into support. We failed on 2 separate occasions in the last few weeks. This is a failed auction. This is effectively, you could argue this is like a swing failure, but it's not. It's another failed auction, but it looks like a swing failure. Maybe on a higher time frame, it'll look like a swing failure. We need to get back above this level. We need to hold it as support. Getting back into the value area is a sign of strength. So if this was to present itself for the 3rd time, I think for the 3rd time, the chances of every time the chances increase in continuation. Yeah, failure, failure, continuation. That's what I'm thinking. I'm thinking 3rd time lucky. Okay, so if we get another reclaim of this value area low, I would really put my money on up, and it will be a really easy trade to have. And I think the first clue will be to get back above this local range value area. That could be the first entry for a long against BTC. That will be, you have the invalidation will be to get back into, to fall back into the value area. That this would be the invalidation. Okay, you have a really tight invalidation there. But ideally what you want, if you're trading ETH BTC, what you want is you want to take out this low here, right into the bottom of this value area low. That would require the price to do this and come back up. Yeah, that would be a much better entry for a long, a swing failure of that low. It might not happen, and that's why I'm also contemplating a reclaim of the value area high as support for continuation. And then I'm thinking third time lucky, because if you get a reclaim of the value area low of the higher range, then you're probably going to push up quite easily to the point of control. And if that was to happen, you're effectively, what you're doing is you're breaking out of this ugly downtrend effectively. So we're at a really critical point now with ETH BTC, and no one can predict the future. So this would be nice for a long. This would also be nice for a long, and I'm not thinking short. I'm not thinking short. Not right now. Okay. Even though we're back into the value area, I'm not thinking short. Okay. I'm not thinking short at all. I don't see shorts right now. If there was a short to be had, it was here as we lost the value area low and we came back down. That was like a reversal candle pattern, closing back, reversing that pattern. Dan, ETH BTC down. Welcome, Dan. Do you know, it's really annoying because right now here I'm looking and it says concurrent viewers 0, but you're watching, so I don't even know who's watching. It's just so annoying. All right, YouTube is rubbish. It should give me live data so I can chat to people. I'm like here thinking I'm talking to no one. So I am thinking third time lucky here. And I am thinking the clue will be a reclaim of this value area high. We are into support right now. And an easy long will be a swing failure of probably this low because oh, you just came in. Okay, yeah. Okay. Well, I mean, I did a little bit of a I didn't really do an update on BTC in the sense that there's nothing really to say. It's just it's range bound. But I did kind of explain some. It was almost a lesson. I'll break it down and I'll put it in a separate section because I am trying to build my kind of repertoire of simple teachings. You know, some people are interested in learning. They're not going to go through hours and hours of live streams to learn. It'd be easier for them to just kind of go to my little learning section. And it's good to like teach people because it helps people. It'll help people to not panic. I don't think people should trade, to be honest with you. I think people should just dollar cost average because it's so easy. I think the easiest path is always usually the best path, but it's good to know how to trade because it just helps. It'll help people to not panic. So yeah, I'm thinking as far as I'm not trading this obviously, but I mean if anyone's interested, a nice SFP of these lows would be ideal. I do still think we're forming that diamond pattern that I drew a few weeks ago, which I've deleted. Have I deleted it? Potentially no. There it is. See that? See? I can predict the future. Pretty cool, huh? So I do still think we're forming a diamond pattern. Usually when I see this kind of price action where you take the lows and you take the highs in a really balanced left-sided triangle, I usually imagine the right side of the triangle to be filled. This is quite a bullish pattern. And so even though we could go up now, I do agree with you. This is the next great trade. Go down, swing fairly this low, form the bottom of this pattern and just head right back up. And then it really will be third time lucky because you're breaking out now. Just break out, right? So this would be quite nice. And so for this to happen, I think you're going to have one like crazy shakeout on BTC. And potentially we can go down on BTC, shake out a few people, clear out the leverages, bounce back up, and then ETH will run. It's kind of what I'm imagining right now. So I'm not necessarily contemplating a reclaim of this value area high to go up, because I do like this idea that I've created. Now, these diamond patterns don't have to play out, because if you do come up here, get a failure, you're no longer in a diamond pattern. You've invalidated your diamond pattern. You're in something else. And I've seen diamond patterns fail. And usually when they fail, they do this. When you get an invalidation of a diamond pattern, it usually becomes some kind of flag. So it's crazy because you see one pattern form and people trade it, and actually the pattern breaks and it forms the original pattern which was forming, which was the opposite pattern. So you have a diamond pattern in the context of the lows of the price moving into this diamond. It's bullish, but if you are forming some kind of flag, then that's the future. Dan is saying, for me, the weekly candle looks bearish. Oh god, this chat. They put this stupid heart button in front of this chat. I can't see one word of it. I have to pop it out. After all these years, YouTube hasn't even been able to solve a simple glitch. For me, the weekly candle looks bearish at the moment. The whole last week was sold off. All right, let me have a look at that for you, actually. Let me chuck all of this stuff into the group. Trades. So hide it. Put that diamond pattern into... Get rid of that. Yeah, that is bearish. But bear in mind, we are at the low of the previous week, so we're into support right now. So as long as we don't close underneath the previous week low, it is a reversal candle. Doesn't mean it's going to go down next week. Doesn't mean that. Next week, if you close above the low there, then the next week could still be a green candle. It could be a green candle somewhere there and another red candle. You can have it like a smaller green red. It's possible. It doesn't have to just go down, or it could go up, sell for a continuation. But I'm just looking how these candles form. Look, we are kind of range bound here. And so I don't, even though it's a reversal, it's not really a reversal is in the highs of a continued move. It's kind of just like a reversal in a range. Okay. And what's interesting about this these weekly candles here, that was a clear rejection of the highs, clear rejection. I think third time lucky for continuation, but we have a nice weekly level right here. So the best trade here for sure is going to be a swing failure of this low here into the weekly level and back up, because that's not just the weekly level, that is also the volume area. So if I was to just pull from that candle which comes into the range to here, you see the volume area low, the value area low is there. You also have this weekly level here. You have two weekly levels. You have one there and you have one here. So let me just mark those off. These are really strong liquidity levels. And you potentially have some kind of swing failure. If it offers a swing failure, no, it doesn't always have to offer you a swing failure. If you have a lot of buyers, there won't be a swing failure. There'll be just too much demand at the lows. Good morning, R3A. I'm well, thank you. Yes, thank you. Like my videos. Like, I mean, you don't have to like, but only like it if you like, but it's much appreciated. There's definitely quite strong liquidity here. Definitely. Okay. So even though losing the point of control is considered bearish price action, you're coming straight into strong liquidity, weekly levels, potentially a swing failure, and another weekly level. That really would be the place to buy ETH. You get that opportunity, buy ETH, I think. Okay. And let me just mark that out. I'll just put it here for reference. I don't hold BTC except for derivatives trading on inverse perpetuals, so I'm not going to be trading this. But actually, that's a really good place, because if ETH is strong, so are the alts. And what people don't realize is that the alts follow ETH. So if ETH is pumping, so are the alts. So that just gives me confidence that I can stay in alts. I can be strong in alts. So that would be the trade. And actually, I would like to trade that all the way up to the golden pocket. I had it marked, but I'll mark it again. There it is. That would be a perfect trade. The invalidation doesn't have to be so low because the entry is easy. It's an easy entry because you're just trading a swing failure of this wick here. See that? That's it. It's a really easy trade, really easy invalidation, and it's a really good risk to reward ratio. It's 1:11 on this trade. Very easy trade to have. Okay. Man, Solana projects are pumping in. Of course they are, because Solana, God, gonna have to have a look at it, aren't I? When I look at, let me just put this again into another trade. Great. Rename. Trade. How do big Web3 crypto project? How do you do big Web3 crypto project reviews? I don't know. Good. Why not? I don't know what to do. I mean, I just like to look at the price, but like I could review it. I'm not really like experienced with understand, like for me it's easy for me to do TRVL because I'm an Airbnb superhost and I've been in the industry for 10 years. It's a lot more difficult for me to review like crypto projects because I don't always understand. You think Solana's invested in Gary? Are you sure? No way. I don't believe it. Gary's... I've reviewed Gary. The price action doesn't look good to me. I'll do some more research on that to see if that's true. All right. This is ETH BTC. R3A is shilling Gary. Let me have a look at the candles. Potentially a really nice 3 monthly candle forming there. That's a really nice. We haven't ended the 3 months. This monthly candle last month, it was a good candle. And actually the one of the candle of interest is a 2-month candle. I'm okay with that candle in the lows. Increasing volume. Swing failure the lows. Yeah, that's not a bad candle. What we do want now in these next 2-month candles is an expansion, and we need to close higher up. Okay, and potentially what you're going to get, if we do get a close there, you could potentially get another pullback, and you're ending up potentially with some kind of triple bottom situation. If we don't get a breakout, you're potentially looking for like a triple bottom here, some kind of triple bottom, and that would be extremely bullish, because then you could easily attack the all-time high. Okay, doesn't have to, we don't have to get a triple bottom here. We could easily just break out of this current downtrend and reverse all of this price action for one pullback for continuation. It's very possible. So I do think that we're reversing here, and I'm extremely bullish on ETH. Extremely bullish. I think it's better to be in ETH than in Bitcoin personally. Okay, I think it's very difficult for ETH to go down now, considering that we've been in this range now since the last bull market, and we're at the low of this range. Look, this is the range, and look at where we are. We're at the lows. So I think it's better to be in ETH, but as always, people will have to dollar cost average into ETH. It's not easy to be in ETH unless, just in case we do get one more drop, you know. So it's, I think people need to be in ETH as well. Like, I don't think it's a bad idea, especially when Bitcoin really starts pumping. R3A is saying you should leverage from this. I will ask all Gary community, which are in the millions, to join your buddy. All right. So you want me to do a review on Gary? All right. And you're going to get everyone to join my community. Fine. I'm not one for lying. Okay. So I'm just going to be very honest. Okay. But at the moment with Gary and the price action, I've been looking at it and I can't see bullish price action. But if you're telling me that Solana